So if you look at those red boxes there and look at the sectors you want to be overweight in a quad 3 environment, that includes energy. And then if you look at the style factors, it would be quality and growth would be the style factors to be overweight, and then would be the style factors to be underweight would be high dividend yield and value. So flip over to slide 11 and look at how energy loves quad 3. We're just coming out of quad 4, which is characterized by slowing growth and falling inflation. As such, commodity prices usually take it on the chin, and they certainly did in the fourth quarter. And the table here looks at the last few times we made this transition from quad 4 to quad 3. All were characterized by increasing commodity prices, which buoy the equities that were tethered to them. Flip over to slide 12, and on the left is the XLE. The black bars there would be expected return in both quad 3 and quad 4 environments. Quad 4 is there in the red, and that was 4Q18 and 1Q19. And then quad 3 is the environment that we're about to enter, and that's 2Q19 through 4Q19 is what our macro team expects us, the duration that our macro team expects us to be there. So the black bar, that's going to be your expected return for energy. That's plus 3%, and that sits in the 79th percentile relative to other sectors. You can see there on the right, that's OFS, which obviously has a lot of leverage to higher commodity prices. Flip over to slide 13. Both upstream and downstream check the boxes, but what about midstream? So midstream, based on this backtesting math, doesn't check the box, but we think it's important to take into consideration how the industry has evolved over the past 10 years, which we'll go through in a lot of detail later. But the expected return for midstream would be negative based on this back test, and I think most of that comes in kind of the early 2000s. You know, today I think if you look at the chart on the right, you know, the midstream space has been much more tightly correlated to commodity prices than most management teams would care to admit, both on a first and second derivative basis. And by that we mean that there's exposure on the income statement as well as on future volume growth. So you saw I think as a result of that, you saw the historical correlation breakdown in 4Q where the expected return was pretty high, I think 4%. But you know, we would expect going forward for this space to track much more closely with the price of the commodity.